And we're live. Hey, what's up, everybody? I'm Abel Perez.
And I'm Stephanie Perez.
And we are
the Married Loan Officers.
Welcome to the show. And
Welcome, everybody.
We want to always encourage you to like, subscribe, share, let people know that on this show, the MLO Show, we deliver the fire. All the great information known to getting people qualified,
Mankind.
working through issues surrounding mortgage financing, and provide great tips every single week, right?
Yes.
So anyway, yeah. So how you been, Stephanie?
I've been good. How are you doing?
Wife, mother to my children, baby mama.
Valentine?
Valentine. I haven't asked you yet.
You haven't asked me
and I
yet.
think
So
that might
I
be
guess
a
that
problem.
one's off the checklist.
Well, I better hurry up before all of our hundreds and thousands of viewers start
Before someone
hitting
asks
you
me.
up, right? Beating me to the punch. Well, anyway, shot the link right there. We are on Instagram, of course, on YouTube. That's where you're watching us now. Smash that bell. That's going to give you access to alerts anytime we post new content so that you are always in the know. Because all the information we post is all relevant to the time. And in this industry, things fluctuate all the time, right?
Yeah.
So-
Things are different from one week to the next. So
Yeah.
it's important to stay in the know.
In the know. So what do we got going on today? What are we talking about?
Today we are talking about self-employed individuals. People that are self-employed. Can they qualify for a home loan?
Yeah. Well, that's always a super important topic, right? Because especially here in the Central Valley, we're located in the San Joaquin Valley of California, and specifically the Madera, Fresno markets. And we have a lot of people who do have that entrepreneur spirit, right?
Yes.
They do offer services or products, and they do it as a self-employed individual.
Yeah.
And so a lot of questions that you guys have been providing to us about this. And so we thought, what better way to answer those questions and put it here on the show.
Yeah.
So cool. Let's dive right in.
We are going to dive in. So, Abel, can someone who is self-employed qualify for a home loan?
Absolutely. Absolutely, yes. And again, we as banks and as lenders, we understand that people who are self-employed are sometimes some of the more capable, as financially capable individuals. And so we certainly don't want to punish anybody for being self-employed or restrict anybody from saying you must work for a company and earn a W-2 in order to qualify for large financing like mortgage financing. So the answer is yeah, you can absolutely be self-employed.
Okay, now my next question is, how long do you have to be self-employed in order for it to count?
Great question. Great question. So, all of being self-employed does require documentation on paper, right? You can't just be a self-employed hustler, right? You can't just say, I'm an entrepreneur,
hustling.
I'm a grinder, I go and I make my money, don't worry about it, right? Mm-hmm. We have to have record of it. And so when we're talking about self-employed individuals, we're talking about people who have either established an actual business, right? Mm-hmm. It lives on paper, nowadays online, right? Yeah. We can go to your website, we can go to a physical location. It's a true business, right? And most importantly, you have tax filings showing the business's revenue that's being generated, right? You're paying taxes on that money. And we'll dive, I think...
I know there's a couple different tax forms when it comes to being self-employed. There is a corporate tax form and then a Schedule C. Can you tell us the difference between the two?
Yeah. So we are in tax season, right? And, I dropped a video on the side talking about, how you should file or, how different strategies on filing your taxes and things like that. But to answer your question, a Schedule C is somebody who's an individual. Let's say you were, doing a business where you were selling lemonade, right? You had a lemonade stand and you were the only employee and you just did that every Saturday, right? You made, a good, $2,000 or $3,000 every weekend doing that. And so it justifies you having to file taxes on it, right? Mm-hmm. So that would be more of like a Schedule C. You're not quite an LLC or corporation, right? You don't have those S Corp filings. And so it's all within your own. Now, it doesn't have to be a business as simple as a lemonade stand. I just use that as an example.
Yeah.
Some people are mechanics. They are, they do, general labor, like handyman work. That
or
sort of
like
thing.
nail techs,
Yeah, exactly.
eyelash
Yeah.
professionals.
And so typically they're going to create, or they're going to just file under, themselves. They're a sole proprietor, right? Now, when people start getting a little bit more into their business and start realizing like, hey, look, I got to protect my personal finances from the business finances, then that's when you start seeing LLCs being established. You see these S corp type documentations or tax filings where your corporation, your business, has its own tax filings on its own, right? And so from those tax filings, you would say, all right, well, this is how I pay myself, and it all shows record of that, right? Typically, you would have a K-1, and that K-1 is another form that simply says, Stephanie Perez, as the owner of ABC Lemonade, you own this percentage of it, and then here's what the profits were, right? And that's essentially your take on it, right? So there's two separate ways to file there, but either way there's no wrong or right way to do it. Obviously consult with a business consultant with structuring your business, maybe even a CPA who can give you the best advice on how to structure your self-employment income, right? But the reason why both of these are so important in a topic of why us mortgage loan officers understand it, know it, and are encouraging people to file taxes on their income is because when you go to apply for a home loan, you want to be able to qualify for a conforming loan, right?
Okay.
And so each of the conforming loans in the guidelines state that you have to utilize 2 years of tax returns on that business in order to utilize that income that you're generating from that, right?
Okay.
So typically 2 years is that minimum of being self-employed for obtaining that documentation. So some people might say, well, I've it's going to be 2 years next month, right? But if we don't have 2 years of tax filings, so if you started, let's say in 2022, well, I guess that wouldn't make sense, but let's say you've been doing this for a few years, but you barely started filing taxes on your business in 2022. 2022 is going to have that business on paper,
Yeah.
but you're not going to have 2021. So in our case, we're here in February 2023. We're looking for the past 2 years of tax returns. You're going to have an issue there
Yeah, you
when
only
it
have
comes
1
to
year.
conforming loans, right?
Okay.
Yeah.
Now, what happens if somebody reports, because you said you have to use the income from profits from the last couple of years. What happens if someone reports losses?
Right. So this is kind of digging into how we calculate income, right? So typically the FHA, conventional VA, all of that states that when we're utilizing 2 years of tax filings, we're basically taking the profits, right? And we're saying what's the average over the last 2 years, and we're always looking for improvement, right? Because we want businesses that are stable. We want income that's stable and likely to continue, right? So if in 2021 you made $50,000 and then in 2022 you made $60,000, right? What we're going to take is we're going to take those 2 years, add them up. It's $110,000, and we're going to divide that by 12, right? And that is, or I'm sorry, 24, because it's 2 years.
Yeah, 24.
We're going to divide that by 24, and that's going to give you your monthly income that you would be eligible for, right? And there are income calculators. We do consider different aspects of your tax return within that Schedule C or those corporate taxes, where we might be able to give you more credit than what your line 31 profit line states, right? And all that kind of varies case by case.
Okay. And I know you mentioned what is best case scenario is a conforming loan for
Yes.
self-employed.
Yeah.
Okay. So what is the benefit of a conforming loan versus a non-conforming loan?
Yeah, so conforming loans are your FHA, VA, conventional loans, jumbo loans, right? All of those loans are really targeted for not just first-time home buyers, but for individuals who are looking to occupy the residence as their primary residence. And each of those are going to give you, each of those loans are going to give you much better rates. They're going to give you the opportunity to come in with a higher LTV, loan to value. So rather than having to put a 20% down payment, FHA only has a minimum requirement of 3.5. Conventional, only 3%. VA will let you qualify up to 100% LTV, right?
Yeah.
You don't have to put a down payment if you qualify under that VA loan. So those are the benefits of the conforming loans. On the non-conforming loan side, non-conforming loans are going to be what we like. An example of that would be like a bank statement loan. And so the disadvantage of going with that is they're going to want the 20% down payment. Or 15 or 20% down payment, depending on your credit score. But they are going to want the higher credit score. They are going to, be a little bit more strict on the debt to income ratios, right? You're not going to be able to max it out. You're going to have to stay within certain ratios. You're going to have to put the 20% down, and the interest rate, they are going to charge you a little bit more because it's considered a higher risk loan, right? They're saying, hey, we know that no other banks, especially using the programs FHA, conventional, they're not going to accept this risk because you don't have the proper documentation. So it's a riskier loan. So it's going to come at a price of higher down payment, price of higher interest rates. So there is a big difference. Now, the benefit of those non-conforming loans is you have a loan, you have an option, you have the ability to purchase the homes, whereas the conforming loans are going to say, nope, you don't have the documentation. And I'll give you an example. I have a client who, in their business bank statements for the last 12 months, they're averaging deposits of north of $20,000 every single month. And so, we know that business is producing revenues. We know that it's doing well, right? But at the end of the year, this individual, because in order to preserve that money that they're making, they're using all of the tax, deductions that are possible. And they've been doing that just to kind of survive, right? And sometimes business owners just have to do that. Like we can't afford to give up 30 or 40% of our revenues to taxes because we're still trying to build. We're still trying to grow, right? So they're using all these deductions. And so on paper, the profits look really weak, but we know that there's income going, right? So these non-conforming loans take that into consideration. They say, look, we're going to take that risk. We are going to say, yes, you are making that much money, and we're going to give you credit for that. And we're going to allow you to buy based off of that. But your credit has to be this. Your down payment has to be, 20% down.
Yeah. And
guess what? Your interest rate is probably going to be about a 1.5% higher than it would be if you were going with like a conventional loan, right?
Yeah.
Now, buyer says, that's fine by me because nobody else is going to let me buy a house. Here's a loan product that will, so I'll accept that and move forward. And so, fortunately for this individual, they had great credit, all of those things. And so their terms are actually as not too far off from a conforming loan. But those are the type of solutions that, we could certainly find for those self-employed individuals. So,
cool.
yeah.
Thank you. Thank you for that knowledge bomb.
Drop. Salt Bay. I don't think Salt Bay is popular anymore.
You know what I just remembered when you were talking? Not that I wasn't listening. I was listening.
You were gazing into my eyes, daydreaming.
I remembered that Backstreet serves clam chowder on Fridays. It's Friday.
Yeah, it's also 11:30, and
we're probably late.
They're probably sold out.
Oh man.
So if you are like Stephanie and didn't listen to a thing that I said and would like to hear that again, you have the luxury of rewinding. Or,
like what
scrolling
is it called?
back,
Like
scrolling back or, whatever. You can go back and listen to that again. I'm sure Stephanie's going to have to because she had food on her mind rather than, trying to help self-employed buyers.
I was listening.
All right, cool.
No, but thank you. I appreciate all of that.
So any questions on those?
No, I do know you mentioned VA loans, and you can use a VA loan being self-employed, right?
You can,
Doesn't take away your
VA
VA
you can.
status.
But again, VA is a conforming loan, and their income document requirements are going to require the 2 years of tax returns.
Okay.
2 years of tax returns, and that calculation is going to be very specific, very in line with all the way conforming and conventional make you compute that. So very different, So yeah, so being self-employed certainly has its perks, and like I mentioned, oftentimes self-employed individuals are finding themselves making a whole lot of money, but then on paper you can't show it. So be very cautious of that, or conscious of that rather. So yeah, you might save a little bit by not, by making all your deductions. You might save on how much you have to pay in taxes, but it could really cost you when it comes to qualifying for a home loan. So be prepared for that. I was thinking the exact same thing. Lion King, be prepared. Okay, Scar.
Okay.
So be prepared for that. And the best way to prepare for that is by during our current tax season that we're in, talking with your tax preparer, talking with your CPA, and letting them know, hey, look, the goal is to buy a house. And so we may not want to use every tax deduction out there that's going to reduce our profits, because we do want to show a healthy amount of income.
Yes.
And of course, if you are having those conversations, you also want to include myself in that conversation, because I can tell you specifically where you need to be, or give you a target so that that you can get yourself there, right? And of course, we're not encouraging anybody to falsify their tax returns or anything like that. It's not what we're talking about. We're simply just saying, the revenues that you make are the revenues that you make. You can't go back and fudge those numbers. But what you can do is you can sacrifice a little bit on the deductions that you qualify for and say, you know what, we're not going to seek that deduction. I'm not going to turn in all the receipts on all these expenses and try to write off every little expense, because I want to show a little bit more of profits, right?
Yeah.
Because sometimes people get a little bit carried away and they start deducting every little thing, right? And so we understand that happens. Again, we're not encouraging anybody to fudge their numbers, but we're certainly wanting to make you aware that those deductions, especially those in excess, can potentially harm you when it comes time to qualify. So
Right.
that's my legal disclaimer, so I don't have
The legal disclaimer.
people knocking at my door here.
All right. Okay. That was all the questions I had today about self-employed
Cool.
individuals.
Yeah. Well, aside from that, tell us about your life, starting with the day you were born. No, I'm just kidding.
On March 9th, 1991.
Oh man, you just gave
I was
you
born
just gave a
at
lot of
11
information about yourself.
Oh.
I think you're just those might be security questions. You might have your Gmail.
My
tapped
mom's
into
maiden
now.
name is my social security number.
All right. Well, thank you so much, Stephanie. Honey Buns of Oats and Baby Mamas, and I don't know. I got to come up with a good nickname for you, but I really appreciate you.
Why was baby mamas plural?
Baby Mamas? Because I have multiple kids.
Okay. We should go. Thank you.
Yeah.
Like, subscribe, comment, all that good stuff.
Yeah, and if you're self-employed, again, reach out to me and Stephanie, and we can put you on the right track to ensure that when you are ready to qualify for a home, you are doing so with confidence. Take care.